October is so far the best trading month of all of 2025 for me. I am up between both of my funds over $419,000 in realized profits, meaning that I've closed these positions out and the money is mine. And my goal in this video is to share with you the biggest trades that made up this profit, and more importantly, to shed some light on the actual strategy that was deployed in order to get these returns so that you can recreate this on your own. The bulk of the profits come from my main fund, which I trade about 90% shares in this fund. If we look at the actual returns and stats for October 1st to October 23rd, this fund is up $356,000 with a trading win rate of 52.5%, a profit factor of 4, and an average win-loss ratio or risk versus reward ratio of 3.6. Before we go any further, I want you to understand that one of the biggest lies when it comes to trading and investing is that you need to be right all of the time. Professionals, including somebody like myself, even though I'm not licensed and none of this is financial advice, care more about risk versus reward, meaning how much money I'm getting paid when I'm right versus how much money I'm losing when I will inevitably lose. Because our win rate is only 52% in this fund. And across both of my funds, it's only about 62%. This is why risk management is so important, because I understand that losing will happen. Now, within the past month, we have closed out a total of 40 trades, 21 winners and 19 losers. Our average win-loss ratio, which is this number here, as we said before, is 3.64. And what this means is that when I'm winning, I'm getting paid on average about $25,281 for the 50% of the time that I'm right. And when I'm losing about $6,949. And you have to understand how powerful that is. And a lot of it comes down to the system. When we go over the actual trades that made up the bulk of these profits, you'll get a better understanding. But if you had a magic coin that you could flip, and every time it's heads, you get paid $25,000, and every time it's tails, you lose about $7,000, you would sit there and flip that coin as many times as you possibly could. Now, not every month is this solid. Like I said, this is my best month so far this year. And if we actually just go back and look at September, trading the same exact system, I barely made money. I only profited about $15,400. And this year so far, starting in January, we're up about 1.4 million between all of the funds, with a win rate of right around 52%. So that's a really good sign when it comes to building out a strategy that not just for 1 month is the win rate that same, but basically over thousands of trades, the win rate is staying about the same. Going back to this month specifically, I want to share with you some of the biggest wins that we have had within the main fund that make up the bulk of these returns, and then explain to you and share exactly why I took these positions, because there were a handful of trades that made up basically almost all of the returns here. Some of them were options, but the other half were shares. And the thing that you're going to notice across all of these is that they're all trading the same exact strategy. So let's start first with these shares. The first main trade that we ended up closing out was actually today, and that stock was for AA. We ended up buying shares. You can go into our executions and see that back here all the way in July is when we opened up this position. Now remember that we are going to see this be recorded in October as a profit, because that's when we're closing the trade out. But a lot of these positions were actually opened weeks and months ago. You're going to see that we opened up a position here at 9:49 a.m. on 7/1. So it was on July 1st. At the time, price was trading down here at about $29.76. Now, the reason that we ended up taking this position in the first place is very simply because it was meeting our criteria on the weekly chart. Now, for those of you who have taken our free courses, which teaches this strategy in depth, you already know the reason that we ended up taking this trade. Price had pulled all the way back here to a low of about $25 in April, bouncing off of our smart money zone. Now, this smart money zone is basically the lowest that institutions are normally going to allow a stock to sell off to before they step in and save the overall structure. And the reason for this is because institutions are only going to be buying at significant discounts. They're going to buy at lows and they are going to sell at highs. You can see this present back here. As price pushes up into this resistance band, which we're going to talk about later on in this video, they start to scale out of their positions. They accumulate on pullbacks, scale out again at the top, and get back in on pullbacks. So this is exactly what happened with AA. We started accumulating after that bounce, and now we ended up closing the position entirely because price is trading within our bands. Now, these bands are important because normally when we are trading at them, it means that price is going to reject because short term we are overvalued. And this is why I closed my position out entirely. If we go back, we can take a look at Soundhound, which we closed out $44,000 in profits, which is a 44% return on shares. This one, we actually opened a position back in September. You can see at the time price was trading right here around $13.34. And as price has been breaking out, we've been reducing our position size each and every single time, following the same principles, looking to start positions inside of smart money zones and sell as price is breaking out. If we actually go back to our trading journal, this is not the only position that we've taken on Soundhound. We've been taking multiple positions in the past couple of months simply because price was meeting our requirements, which were the same things as before. As we said, price will normally break out. Institutions will sell as we are breaking out. They will wait for price to pull back into the smart money zone once again. They will look to accumulate shares within that smart money zone, and then they will look to play a breakout, normally up to previous high. The entire system teaching all of this is down in the description completely for free in the course library, and the smart money zones specifically are taught in step 3. You'll be able to learn how to draw these zones and the exact tools and setups that I use in less than 30 minutes. And finally, one of the bigger trades that we ended up closing out when it comes to shares was CleanSpark with an $82,652 profit, or an 82% return on investment with shares. You can see that we opened this position back in June. We actually closed some of our shares here in July, closed more in September, a little bit more here in October, and then finally took the rest off the table October 13th. And once again, the same exact system, the same exact ideas that happens here is exactly why we were closing out our profits. Now, in this case, I kind of butchered my initial exit. I was closing shares as low as $13.93. I did allow a lot of profits to continue to ride, but imagine if I never closed out here and I never closed out here and I just allowed price to continue to break out. I would have ended up making, instead of an 80% return, close to like 150% return. But the truth is we cannot actually buy and sell at the perfect time, and that's not what I'm here to do. Now, once again, if we zoom out to the weekly chart, the same exact situation and same exact setup was happening on CleanSpark. Price was pulling back into this smart money zone on the weekly time frame. Price hit that smart money zone back here in April and bounced, and from lows to high ran about 265%. Now, if we zoom into the daily time frame, which is what you can see our actual trades were taken on right here, the same exact principles apply on the daily time frame as well as the weekly time frame. Price breaks out, runs the first half of the summer, basically about 57%, pulls all the way back down into the smart money zone. So this is where we want to be accumulating. And from there, price broke out about 150+%. Now, a huge reason that I started taking some of my profits here at like $15 and a little bit early was very simply because we were moving into this deviation band, which, like we said before, normally that means price is going to reject and pull back. In this case, it didn't happen. And that's why I really talk a lot within our trading system and in the trading library about scaling out of positions. The thing that you will notice with all of these trades is that I didn't hit the sell button one time. It's always a release of positions. I reduce exposure as the stock is breaking out. And as the stock starts pulling back into smart money zones or pulling back into discount, I'll start to add exposure once again. So I'll do a video when I'm actually looking to get back into CleanSpark. But if price continues to pull back down, you say I have an alert right here at $14.50, I'll look to start accumulating again at the $15 to $14 range and look for that breakout to the upside. All right, so now we've talked about these shares positions. Let's talk about the options positions because they made up like the other half of all of this profit. Between Soundhound, CleanSpark, and AA, it's about 150,000 of the 350,000 in the main fund alone. Another big portion of this was AMD. Now, AMD, I ended up closing out $110,000 on this trade alone, which was a 224% return on leap options. So these options expired 3/20/2026. If we look at the actual execution, you can see that we ended up buying these on 9/22. And we ended up closing them on 10/6 after that huge OpenAI news for a 220+% return. Now, for those of you who have been following me for a while, you know that I've been trading AMD all the way back down into the end of last year into March and April of this year because the same exact setup that was happening on all these other stocks was happening here. Price was pulling back into the smart money zone in April. Price bounced off of the smart money zone and moved its way up to $181. The same exact setup happened back here in October of 2022 when price bounced off smart money zone and ran 300% in 500 days. Now, the thing to understand and remember, this was just one of many trades. If I go back to our journal and I actually just remove the date filter, much like CleanSpark, which we said CleanSpark, 44,000 was the most recent, 82,000 was the most recent trade. Over the past couple of months, we're up over 217,000. Same deal when it comes to AMD. If we search just AMD alone, we've been trading this for a while. We're going to go into our calendar and we're actually going to go back and look through August, July, and June. You're going to see that as the stock was bouncing here throughout the summer, I was closing out profits and then rolling my position. If you don't understand options, how to trade them responsibly, or what rolling means, then go to our free courses and go to step 4 under options trading simplified. That is going to be the best, most effective, and simple options course that you will ever take, and it is truly free. Basically, as the stock was breaking out, I would close for a profit and then open a new position. So you can see that initially here in June, I had 12/18/2026 $125 calls. I would close those out for a profit and then open up new call options for a further expiration or a further strike price. So I closed the $125 calls and I bought $140 calls. Then I closed those for a $50,000 profit. I also had shares, which I closed for a $73,000 profit. And I would continue to do this each and every single time the stock continued to break out. So we closed the 140s, then we'd open 160s. And we continue to do this over and over and over again while price was continuing to break out. And now I do not have a position at all on AMD. The main reason for that is I just don't think the risk is worth the reward at this point. As I said before, as a stock is pulling back into a smart money zone, I look to actually add exposure. And then the further that we get away from it, the more exposure I like to take off. And so since we are like really far from a discount range and we are trading close to this deviation band up here, which we normally reject at, if we go back, you can see in most cases, we never really get that close to that red deviation band. And when we do, it pulls back drastically. I've decided that it's just not worth it because yes, this could probably and will probably run another 20%. It's just not worth me tying money up in it anymore. Now, another position that I actually made a good return on when it comes to shares, and I forgot to share this with you guys when we were going over them earlier, is SMCI and CLF. SMCI, we closed out for a 41% profit. If you go into our executions, you can see that we were buying here on 9/5. We took some of our profit off the table here on 10/8, and then the rest actually just a minute later. We closed out of the entirety of the position when we got this breakout. And this is for the same exact reason as all of the other ones. Price was pulling back on the daily chart into the smart money zone. Price had bounced, came right up into the 2x deviation, made about a 34% profit, and we walked away from the trade. And another one was actually CLF. CLF, we made a 33% return on investment with shares. We ended up buying this position back here in August of 2025, which was this year. We closed out most of our profits here on 10/8 and then closed out the rest of our profits here at 10/9. And once again, the same exact situation happening on CLF. Pull out to the weekly chart, price was trading back here inside of the smart money zone. Since then, price has broken out pretty drastically. We actually exited like right near the top, which was really, really good. And now it looks like price is probably going to pull back into our institutional buy zone. So the thing I want you to understand is that this strategy can be used across any time frame and across any stock, right? This is just one of about 65, I'm sorry, more than one, about 6 or 7 of about 65 plus positions that I'm currently holding that are all meeting that criteria. Like if we pull another one out here, let's look at SUP-V, right? So I'm in 10,000 shares of SUP-V and an average of $6.17. If we go to the weekly chart and we look at SUP-V, you're going to see the same exact situation happening here. Now, of course, everything doesn't play out to perfection. We actually broke through that smart money zone, pulled all the way back to about $5, but market structure never broke. And so it looks like SUP-V, if we can break through $7, is probably going to bounce up to about $12 to $13 within the next 6 to 12 months. And all I do is look to rinse and repeat, play the same exact situation, the same exact setups, the same exact stocks over and over and over again. Some huge trades that we ended up making earlier this year was Reddit. Price pulled right into the smart money zone. Price broke out about 250%. If I go back to my dashboard, I look in my filters and we just filter Reddit. This one we close over $108,000 just this summer. Another good one was Robinhood. Price pulled right into smart money zone and broke out. If we go into Robinhood, you can see we made about $54,000 on that one. And another great one was Coinbase back in the summer, bouncing off of this support level in April, running about 140%. If we look at Coinbase, you're going to see that this year so far, we have made over $500,000, about $477,000 from about November of last year until right now. And if we look at just this year on Coinbase alone, starting in January to October, we've made about $67,000. So overall, I hope that this video helps. The whole premise of my strategy and what I do is to focus on stocks that are trading at a discount, which we can use the institutional and smart money zones to find. I look to wait for buying pressure to come into the stock on the BX trender, which both of these indicators are both completely for free within our trading library. And very simply from there, I just use proper risk management. If we look at my current holdings, you can see that I don't really have any positions that are over about 2% of my portfolio. The biggest holding I have right now is RDW. The smallest holding I have right now is Apple and VKTX. And the reason for that is because those are both stocks that have already broken out and I'm scaling out of positions. Apple bounced off smart money zone, broke out to the upside. VKTX bouncing off smart money zone, starting to break out to the upside, but I took some profits just because I think it's going to reject a bit. So the whole point is that you can use this strategy on any time frame. If you want to learn it, it's completely free. Link to the entire trading library is down in the description, and I'll see you guys next time.